Hello, it is Saturday, January 16th, 2021. Appreciate you being here. Well, we got a lot to talk about. The suffering is about to begin, according to one very well-known economist. And we're going to dissect what he talked about here in a recent video. All right, we're also going to talk about this K-shaped recovery, the economic risks that are in play right now, considering we have a transition in D.C. to the new administration. All that and a lot more. Let's get into the news here. All right, now first of all, let's talk about this recent video by Peter Schiff. It did get a ton of views, and it's only been out a short time. And it caught my eye, just the title here, "We're about to suffer worse than I thought." I listened to all of it. I had to go back and rewind here and listen to a couple points that he was making. But it's nothing that shocking or new. Basically, he is saying that the level of Fed money printing and market propping and stimulus is going to be bigger than he thought. Okay, now don't just listen to what anyone says. You know, I listen to a lot of different people. Don't listen to what I say only. Thank you for listening to me, but don't listen to me only. Go around and get different perspective, different points of view, because there's a lot of things that Peter Schiff said, that have been right on the money, and there's other things that he said that have been, completely the opposite of what he said. All right, just look at some of the digital assets that he said we're going to crash to zero that recently hit 40,000, right? So you have to do your own research is what I'm saying. But the major points in this video were the fact that the new administration is going to come in, and under modern monetary theory, which everybody knows by now, you can create unlimited amounts of money out of thin air, spend as much as you need. Global governments are being incentivized, or not being incentivized, being encouraged to spend as much as possible. We're going to talk about that in a minute. All right, but when you listen to different people, it's really, really hard to sort out, what they think is going to happen, because there's different time frames involved. All right, so let's talk about Peter Schiff just real briefly, then we'll move on. So Peter is constantly saying we're going to go back to sound money eventually. Gold and silver, of course, that's his business, so he's going to push that. All right, but I also think he really does believe that we're going to go back to that. But think about if we did go back to sound money, backed by a precious metal, let's just say gold and silver for now, you would see massive deflation, because when money is backed by a hard asset, a commodity in this case, that's going to put big strict limits on what the banks can lend out. And we all know what happens when banks stop lending. Prices come crashing down. That's why the banks have been incentivized and have been given the tools to ramp up the lending, right? Not just lower interest rates, but taking away the fractional reserve requirement, the reserve requirement for banks to lend. We see underwriting getting looser and looser as time goes by. And now we're back to the point where some of the liar loans in the mid-2000s are still no match for the level of debt that we are into today. So you would think with liar loans, that would have been the ultimate debt creation tool. But here we are today. We have exceeded the debt that we saw in the mid-2000s, leading up to the bursting of the housing bubble and the financial crisis that ensued after that required billions in bailouts. Also, when you look at the Fed intervention, the Fed's balance sheet, we have exploded beyond what we ever went through during the financial crisis. Okay, so we all know that lending creates asset bubbles. It makes prices rise. It creates inflation. And we are seeing a lot of inflation. We're going to talk about the consumer price index here in just a moment as well. But if Peter did believe we were going back to gold and silver, then he would be talking about deflation. So it sounds like his time frame, he anticipates inflation first. And then once we hit crisis that's felt through most of the population, which I think we're almost there because there's so many people now dependent on payouts, then it sounds like he's predicting eventually we'll go back to sound money, hard asset-backed currency. But either way, if there's inflation, you're likely going to see gold and silver rise along with the other prices. Maybe not as much as some other assets, because there's still a lot of manipulation in metals on the paper markets. But also, if and when we do go back to the sound money, which I think we will also, that's going to also be a big boost for metals, because you have to, if you're having millions of people in America, what is it, about 340 million people now, if you're going to have hundreds of millions of people using sound money, you're going to have to raise the price of the underlying asset to be able to cover such a huge population, right? And it doesn't mean that people are going to be walking around with coins in their pocket. It can still be digital, but the digits would be limited based on the underlying commodity. All right, so basically, again, nothing new here, just more of the same: money printing, debt, inflation, but it's just going to be more of it than what he anticipated originally. Now let's take a look at this Reuters article right here. Spend as much as you can. The IMF head urges governments worldwide. Spend as much as you can. Well, let's think about this here. As much as you can is unlimited because the money is not backed by anything. You can create as much as you want. So as much as you can it's unlimited, right? There's no limit. Have you ever seen, let's say the government here, not pass a debt ceiling or not pass a debt ceiling increase, right? They call it a debt ceiling. It's really not a ceiling. If something can be infinitely raised, I wouldn't call that a ceiling. And I'll just read an excerpt out of this. Policymakers worldwide should embrace more spending to help revive their stuttering economies. The head of the IMF said on Friday, the managing director did not give any specific economic forecast, but made clear her desire for governments to up their spending and that a synchronized approach internationally was best for growth. All right, so think about what they're saying here. They're saying that spending is going to stimulate the economy, and that spending and that stimulation is going to be growth, economic growth. And what do they call economic growth? Well, rising prices. So the Fed's goal is to create inflation, and the creation and the inflation rather and rising prices that they create, they go ahead and chalk that up as economic growth. Oh wow, look, people spent more money. It's economic growth. Right, in the meantime, people are getting further and further and further into debt. Not everybody. I mean, the people at the top 10% are doing better than ever. So let's talk about that next. The K-shaped recovery has created a lot of new 401k millionaires. Right, more than 220,000 workers crossed the $1 million mark in their 401ks in the second quarter of 2020. As of the third quarter, there were 262,000 401k millionaires. And I'm sure we're going to see the fourth quarter numbers come out pretty soon. It's probably even higher because why? The stock market went even higher. Right? So it's more of this K-shaped recovery where the people that are invested in these rising assets, including the stock market and other areas, are seeing huge gains, and a lot of people are doing better than ever. On the other hand, you've got the bottom slope of the letter K, and a lot of people are getting further in debt, and more people now on payout programs of various different kinds. And what I think is going to happen is a lot of these new millionaires, 401k millionaires, are going to get the rug pulled out from under them at some point. Okay, I am still a believer in the boom and bust business cycle. Right, they can create unlimited amounts of money, yes, but greater wealth is made by the people at the very, very top, the top 1%, when there's boom and bust cycles. They can come in and buy assets on the cheap and then ride the wave higher, sell at the top, or even short the market at the top. And believe me, the top 1%, they know exactly if when to do the shorting of the markets or to go into the right asset at the right time and sell at the right time. So yes, I still believe boom and bust cycles. I think you have to ride both sides of the fence though, because we don't know the timing of this. Eventually, yes, there'll be a massive deflation. The monetary system is going to be transforming. The things we've been talking about here that are going to be unfolding, it's crazy right now. We've got basically looks like a war zone in D.C. with barbed wire, razor wire fencing, and more troops than we have in the Middle East right now in D.C. So this country is going to be in for some big, big changes, and to me, it doesn't look good. What we can do is try to continue to prepare, try to analyze as much information as possible, and try to ride these rough waters the best we can, navigate these waters. Thanks everybody for watching today. Happy Saturday. Stay well, stay safe, stay prepared. Bye for now. Peace.